arguably the biggest talking point of last evening was the GDP data. So what were the intricacies and what should you watch out for? That is the first piece that we'll talk on Editor's Cut. And of course, top of mind for everybody for the last few days has been SEBI and its verdict on small caps. Sajeet has an exclusive out there. But Vishy, multiple ways, multiple news stories, none bigger than the GDP data.
Yeah. Niraj, so this 8.4% Q3 GDP, that sort of blew all discussions out of the water simply because it's just unexpectedly high. It's about 180 basis points higher than the highest estimate out there in the market.
Yeah.
You're seeing strong growth on the manufacturing side, mining, construction, all of these various sectors showing an improvement year on year. Of course, last year's numbers have been revised to much lower. So obviously there is some amount of base effect playing in. Having said that, the growth number is still sort of shocking, and that's where the people are coming from. What is more interesting is the GVA, the gross value added growth, which is a net of all these of basically indirect taxes. You're seeing, and subsidies, you're seeing that portion coming in at 6.5%, which is absolutely where the estimation has been. So then what is this gap between the GDP and the GVA? Well, essentially
taxes.
The taxes. So that's up about 6 quarter highs, 32% higher, the growth rate. That's obviously going to push up the headline GDP number. What is more interesting is also agri. I think the contraction, this is the first contraction in 5 years, not even during COVID did we have a contraction on the agri portfolio, agri side of the story. It also sort of ends this discussion whether rural economy is under stress or not. I mean, it's very clear it is under stress. There is a monsoon issue which has played out in the agri sort of growth. What the government seems to suggest is that there is improvement in monsoon coming in FY25. Receding El Nino, better sowing of crops, all of these things are going to sort of improve on the agri front. FY25 is going to look significantly stronger. The government is also pitching for a better sort of outlook from multilateral agencies, IMF, World Bank. All of them are much below RBI's 7% estimate for FY25. So, we need to see what exactly those multilateral agencies do. Of course, the government's job is to pitch for a higher rating. But that's where we are at this point in time.
Yeah. So, I mean, Vishy, the standout feature, obviously, the taxes uptick or the tax buoyancy is leading to this. Suffice to say, though, that one shouldn't extrapolate this to what will happen in the next 4 quarters.
Not a stable source of optimism.
Yeah. But very quickly, Sajeet.
If I can come in here.
Very quickly.
Manufacturing growing at 10%, which is good. But consumption at 3.5%, which is bad.
Don't steal my thunder.
Yeah.
But don't steal my thunder.
But let me say that if the consumption remains the same thing, then you're going to see a moderation in manufacturing because there will be a high supply coming into the market, and that would have.
Sorry, why?
Because manufacturing, there has to be a consumption, right?
A lot of manufacturing is export-driven any which ways, right?
No, we don't. We are not an export-driven country in that way.
A lot of manufacturing being set up export-driven, no, Vishy?
I mean, there's also but you have to also consider the fact that there are external uncertainties also. So your export story might look good on the services front.
No, my limited point being that manufacturing thus far has stayed strong despite consumption numbers staying low only.
So consumption numbers staying low. Yes, true. Having said that, you still have to worry about where the globe is going.
Most certainly.
Because that's something that even the government, for example, the CA held a briefing last evening, and he was very clear to point out that there are certain uncertainties and there are elections around the world. So you don't know how things are going to pan out, let's say in 6 months or so.
Most certainly. No, I mean, if you are one of the top 5 economies, you can't be isolated from what the world is doing. But thus far, I must say, it does look. So from a market's perspective, I just thought I'll quickly throw in a quick perspective before we get to the other piece. I mean, how would equity markets probably perceive Q3? I was thinking that equity markets have this reassurance that there has been strong growth now, not just for 1, 2, but the last 3 quarters at the very least, right? So that is one reassuring part. And the HSBC flash PMI data thus far is pointing towards decent activity at the start of Q4 FY24 or Q1 CY24 as the case may be. So is that some reassurance that while we've had a very strong last 3 quarters, maybe just maybe the start of this 4th quarter as well has not been too bad. So that is the other piece. But will markets think that the tax buoyancy that we've had thus far, which has led to the GDP uptick, will that moderate? I think the markets would firmly believe that that will be the case. So in some sense, there will be some tempering of optimism or enthusiasm by this GDP
The
data.
base effect will play out in the next year.
As well. But yeah, just the fact that taxes buoyancy has been so strong, and at some point of time, you've got to give way to it because it won't continue. And private consumption, which I was telling Sajeet, don't steal my thunder, 3.5% really, something needs to happen here.
You have to also look at the fact that there's a core sector sort of slowdown that's coming in for January. I mean, at least that's 1 month worth of data. For the whole quarter, we still need to see how that plays out. But there are sectors that are actually contracting within the core 8 core sectors, and doesn't look that great for the Jan-March period.
Yeah, it doesn't.
7.6 will probably come because of Q4. So let's see what happens for FY24.
Just very quickly, we have 30 seconds on this before we move to the next piece. But what I thought was, will markets worry about it in specific sectors? Electricity and other public utilities expanded 9% versus 10.5 QOQ, and construction 9.5 versus 13.5% QOQ. Maybe not that much of a worry because we know it was an exceptional quarter.
Correct.
Q2. A lot of spends happened then. This is seasonally also a weak quarter for electricity, etc. So maybe the markets will not read too badly.
Just to add,
20 seconds.
Thermal is not doing means that much, but renewable is what is driving the growth in
energy growth.
Yeah. Well, thermal hopefully will pick up. We've spoken to the coal SECI, by the way, and I think that conversation will give some insights out there too. But so this is the GDP. 4 more minutes for the next piece, Sajeet, and that is something that has been spoken about for the last 36 hours, at least, if not more. The SEBI caution. Now you have some exclusive details.
That's right. A stress test on a portfolio which is valued at 5.4 lakh crores. That's the headline. There are nearly 56 schemes within small and mid cap there, and the regulator wants a stress test on each and every scheme of that. It doesn't mean a risk-o-meter like a very high risk or low risk. They want to do a stress test on liquidity, or how liquidity will pan out if someone is going to sell today, or the volatility and redemption comes into play. And that parameters have to be brought in by AMFI so that they are constant for every scheme, so that investor can know that they can map across the schemes and see which is a scheme they want to go in. Today, investor doesn't know about these risks. Many of the small and mid-cap schemes have stocks which are highly volatile in that sense. The regulator wants a long-term investment in small and mid-cap stocks. There are 65,000 crores of new net inflows that happened in last 1 year, and that's nearly and there's an appreciation in the small and mid-cap by most of the small caps have doubled in last 1 year, right? So that needs to be brought in and put out on the websites of all the mutual fund schemes and AMFI in a manner which is understandable for every investor. It should not be jargons or formulas, but it should be in a way saying that if your portfolio, if market turns 10%, your portfolio redemption happens by 10%, what is the kind of impact that may happen on your NAV? And you need to be very clear to the investors that this is the potential risk in a small and mid-cap fund, and you invest accordingly. They are also looking at exit load making it a little more difficult, in the sense the returns will be much lower if you are a small term investor or small term investor basically. So if you're investing for 6 months or 1 year, the exit loads are going to be higher. If you're a long-term investor, it may not be there. But this dynamic thing, it wants the industry to bring in, rather than it's putting its hand and saying that, no, you have to bring in.
Sajeet, sorry, 30 seconds before we wrap up. The piece that you mentioned about mutual funds having to mention that if there is a redemption by 10%.
I'm just giving a classic example. This is the parameters are not been set. It has to be set by AMFI. But it will be in those lines. The danger of impact on the portfolio because of a redemption. Or
can I just ask a question? Nothing comes out of this, let's say. Aren't you panicking the markets then by introducing all of these stress tests? If let's say nothing comes out of it, it's entirely possible that the industry is pretty strong and these stress tests don't really show any kind of issues.
We have 30 seconds for this.
We have been speaking to a lot of fund managers on portfolio manager, and many of them are small cap managers, and they have a stress test for the portfolio, and they say that it takes almost a month for them to exit a stock, and they have to do it in a very gradual manner so that it doesn't impact the stock or the price. So if that is the case here, then mutual funds also have to have that kind of stress test for the portfolio, because a lot of new I would say majority of the new investors who came in the last 1 year, they have come into the small and mid-cap company schemes. Basically.
Fair call. 43,000 crores total, and then that value has gotten enhanced. And just that, Vishy, even if it's a new thing, it may take time to digest in the first 1 month. Then it becomes a norm, and therefore people may not get so spooked by it. Who knows? Yeah. But great insights, both of you. Thanks for that. And do let us know in the comments section, viewers, if you like the stuff that we're doing on Editor's Cut. It's a differentiated thing that we're trying to do almost every single day.